The Xerberus protocol is a risk ratings platform building here on Cardano, which has just recently announced the upcoming launch of their own blockchain using the Cardano Partnerchain framework. Now, this opens up a huge opportunity in a huge new line of services, not only including their risk ratings, which they're very well known for, but this also opens up the opportunity for their vaults, basically allowing for anybody to get access or exposure to multiple assets by investing in one single platform. Now, in addition to that, they'll be providing Oracle services. In addition, they'll also be working on getting more integrations into DeFi platforms, for example, like lending and borrowing platforms, synthetics protocols, as well as your traditional swapping platforms or DEXs. Now, with the upcoming release of their partner chain, there's obviously going to be an upcoming token sale as well. As a part of today's interview, I'm sitting down with Simon and Noah, two of three of the founding members of the Xerberus platform, to break down everything that we know and that we can expect over the course of the coming months. As always, if you guys enjoy interviews just like these, make sure to smash that thumbs up. If it's your first time stopping by and you want more content like this, consider subscribing. And last but not least, if you have any questions, comments, or concerns, leave those down below. That said, enjoy today's video. What's up, Beta Nation? Welcome to Dapp Central, your home for everything blockchain and crypto. I'm your host here for Reed. As a part of today's video, we're breaking down everything related to Xerberus. If you aren't aware, they're a risk ratings protocol that has just announced their own partner chain framework. And as a part of today's video, I'm sitting down with two of the three co-founders of the protocol to dive into everything that we can expect ahead of their token generation event taking place this November 11th. Without any further ado, let me bring up today's guest. We've got Simon and Noah. Welcome up, gentlemen. It's a pleasure to see the both of you guys. Noah, we missed you at the recent summit, but Simon, it's good to see you again after a relatively nice trip in Dubai.
Yeah, it was amazing to meet you at the summit and also have some conversations. It's always like a family reunion to come to these summits.
Yeah, no, it was a really good event. Noah, how are you doing, man?
Yeah, I'm doing really well. I must have missed you while I was there. Because I was also there in Dubai. We must have just been running around in two different ways.
No, I was going to say we must have, but you're super tall, so I'm very surprised that I would have missed you amongst the crowd of average height people. But no, let's jump into business here. I want to definitely make sure to use our time wisely. I've hosted the both of you guys here numerous times. I'll leave the links to those videos down below. But I think it's really important to start off with at least sort of a baseline, right? So for anybody who isn't aware of what Xerberus is, can one of you guys give us the skinny or a quick rundown of what you guys aim to provide? And then we're going to segue straight into your partner chain framework and exactly what we can expect with the upcoming token generation event.
So Xerberus is a risk and asset management blockchain, and that is quite a mouthful of things to say. But at our core, we're trying to replicate something that is known from traditional TradFi market. I think the best analogy between what Xerberus is and TradFi is S&P 500 or Standards and Poor. So when you look at Standards and Poor, what do? They do two things. They provide risk ratings that everybody trusts, and they provide index vaults. And that's really at its core what Xerberus provides. We provide you risk ratings that are cryptographically insured and verified to be true, and where no individual person can influence them, which gives you the trust that you can build on that other products and that you can use it for your portfolio management. And secondarily, we provide index vaults that you can use as an analogy to indexes to basically have exposure in the most risk reduced or risk optimized way.
Thank you for the nice and quick intro there. For anybody who wants to find out more about Xerberus, you can head over to the official website. Links will be left down below, but it's available at Xerberus.io. Risk ratings, as you mentioned, your bread and butter. I think you guys have been integrated in, I would say, the majority, if not all of the major DeFi and just sort of DEX platforms within the Cardano ecosystem. But as of late, you guys have basically announced that you guys will be expanding. And so maybe we get just a little bit of the reasoning why, right, as to the expansion. And then I'd love to maybe hear a little bit about the upcoming token sale. And then I want to dive into some demos that you guys have queued up here for us and the viewers.
Yep. So in terms of the expansion, what Xerberus does is we created a unified model. So for us, tokens are tokens. It doesn't matter what type of token it is. If it's a meme coin on Cardano or if it's a utility token on Ethereum, there's really no difference to us. They're all networks. And so this model lends itself to be replicated across chains. And when it comes to the problem that we're solving, I think it is an industry-wide problem. And when the Cardano Partnerchain framework was published, we're extremely excited about it because it's tuned to interoperability. So that really gave us the avenue that we can, as a Cardano project, serve all of crypto. And we have already gotten quite sustainable interest. So there's one index protocol called Alvaro from Ethereum. They are already working on integrating us. They just recently received $10 million from institutional investors exactly for these types of indexes that we try to create and also create ourselves.
The token sale, I believe it's the November 11th. So literally about a week away. Can we get a little bit of a tease, right? We'll obviously dive into the token paper, which has been released not too long ago, but give us the short and skinny for anybody who just isn't aware or that maybe just wants a quick update on where you guys currently stand.
Exactly. So we have a fair token launch coming up on MinSwap, and everybody who remembers our NFTs, we usually try to make them fairly easy to get in. Price wise, in the beginning, we'll sell about 30% of our total supply that day at a fixed price. And that's really it. So it's a community DAX on which we sell. We try to make it extremely easy for the community to get in and to go on the journey with us for the remaining bull run.
Thank you, Simon. Links again will be left down below to the MinSwap Launchpad. I believe it's fully permissionless, so anybody can go ahead and jump in and participate. But as more details are released and revealed over the course of the coming days, I'll leave everything linked down below. All right, let's jump into some product demos. I think this is a bit of an exciting piece, at least for me, right? So being able to see what you guys have been building, seeing that you guys have a product before a token launch, I think is very reassuring. But I'll turn it back over. I think Simon will be driving this piece, but no, if you want to interject, I believe you have the opportunity to do so. So without any further ado, I'm going to pull up your screen here, Simon, and I believe you can go ahead and share away.
Amazing. So what you see, and we'll go into details, is, let me actually jump back to the dashboard. So when you come to the new Xerberus product, two things will stand out. So you will see, as usual, to connect your wallet, you will see the indexes, which have now really the center place of Xerberus, and you will see some of the remaining risk ratings. One thing that's really important for us, and that's why we chose to design this website, we took out a huge amount of the analytics that people know us for. That was intentional, because really we want that you, the viewer, and everybody else understands or kind of rethink Xerberus really as this index and risk rating protocol, whereby the indexes will drive much of the attention and the revenue. Analytics will be later added, but without further ado, let's jump in one of these indexes. Let's look at the ecosystem prime one. Noah, you are the perfect person to ask. What do we see?
Yeah, so all these indexes are really just kind of testimonies to the risk scores really being able to really capture and understand what are good networks versus what are bad networks, and be able to kind of start DCA inning or DCA outing of these good networks. So this is like the top Cardano projects, for example. Recently, Sunday's jumped into there. If anybody's recently seen the Sunday price, it's also recently gone up, which has helped this index a bit. But yeah, what we see is the overall back test of this type of strategy using the risk scores, and we about 13x over the course of 2 years, which is good. It's really good. And these are the types of index funds that we're going to be coming out with. We really, again, when we go live with the index funds, when Simon's going to talk a little bit later on here about the nodes and the blockchain itself, but when it all really comes together, we'll really start being able to invest based on these strategies as together, and it'll be really really cool to start seeing the kind of what the community prefers. Do they prefer more higher frequency, smaller token baskets, almost like the count of tokens inside of it, or do they prefer much broader and less volatile assets over time? Yeah, I don't know, Simon, is there anything else I should touch on?
Oh, so much. So this is, as Noah said, the ecosystem prime one, and we go in a moment to the ecosystem map, and we can show you what we mean by ecosystem prime. But one other one is the ecosystem broad. So that would give you already, when you see this is 5 tokens, the best 5 rated tokens over time, rebalance always to the best ones. And then you have here the broad ecosystem one, where you can invest in about 51 tokens. So we have to still see, this is a bit more difficult to get online right after the token launch, but the prime one will be very, very shortly live after the after we go after the token sale. So this one is a bit different, right? Like this is a hyper broad one. What it really gives you is the perfect exposure to the entire Cardano ecosystem. It's much less vulnerable to downside volatility because even if a single asset would collapse within this distribution, right, it wouldn't mean very much because it is so broadly diversified. But of course, this comes on the cost of performance, right? You have a little bit less performance if you are very broadly spread out. And so each of these systems has, or each of these indexes has one particular strategy based on our risk rating. So this is the prime ones, this is super broad, and this is ecosystem growth. And I mean, we've been running around telling that our risk rating work, and I think nothing says that louder than ecosystem prime. One that in case that is indeed the case. So this is really what you will be able to invest in, and really, going back to my S&P 500 analogy, we believe, and we already know that from whales and from hedge funds and institutional investors, that that's probably one of the largest asset classes in crypto over the next 10 years, because it's really hard to trade consistently. It's really hard to make all of these decisions, and these are a tool for investors to get a really, like smart exposure in ecosystems across the industry. And just to explain to you guys how we choose ecosystem prime, right? Some people will remember our ecosystem map, where you can just within like a click of a button overview an entire ecosystem. And really what the ecosystem prime, I want to know, maybe go, that's the number of wallets right now. So what you can see, for example, is that when these guys here, like Snake, like Iagon, like Min, this is what we call ecosystem prime, right? Like they're very low risk, right? They have the highest risk rating, and they have very high growth, right? And if you just want to have this ecosystem prime section in your portfolio, but you don't want to always check if something has changed, right? That's what the index vaults are for, because the index vaults will automatically rebalance out tokens that leave the quadrant and will take in tokens who just raise to the top. And the performance, go for it.
Yeah, for example, a token that left the quadrant very recently is World Mobile, right? They're switching over to WMTX. So the World Mobile token itself is metaphorically dying, if you will, right? It doesn't mean the system is dying or anything like that. It's just they're moving to a new token. So the old token is obviously dying. And Simon, if you go back to the ecosystem page, you can see it just dropped from being high growth to very negative growth. Yeah, it's down there towards the bottom in the middle. So it was up in your stake, and then it kind of whipped down and then around, right? And so the indexes were able to auto balance out of that old token and naturally go into new tokens. In this case, was Sunday Swap, and it really allows the investor to keep a rolling index of the highest tokens in the market.
Exactly. And just to highlight that again, it's not that World Mobile is dying. They just moved out of an old token. There's a new token. We haven't listed a new token. Probably WMTX would be already back up there. But again, with the tokens here going on, we will add new tokens. Also, just because I mentioned it, you can now add tokens yourself within the portfolio page. So you don't need to wait for us to really do it. Before we go into the next section, really talk about the testnet, one additional word to cross-chain ability of Xerberus, right? We chose the Partnerchain framework, but we're very excited about it because it allows us to work with ecosystems across, and this is also what you see directly. So the default system is, of course, Cardano, but for new users that might come in for Ethereum, right, you have the same. And now the beautiful thing is when you switch over to Ethereum and ecosystem map, you can get it right for Ethereum. So you can now compare ecosystems super quickly. So you could compare Cardano to Polygon to Ethereum, soon potentially to Solana to Bitcoin ordinals, right? And it always gives you a feeling where in the ecosystems are the good tokens. So even if you want to understand a new ecosystem, it's really it's the best tool out there to in one click to have a feeling for where assets are, and which asset to look out for. Also for all the meme coiners among you, I think it's quite telling that in about every network they will look at, there's always one or two meme coins up there in the prime sector. So it speaks really to the cycle that we're in.
Yeah, tons of really, really good information that you guys have shared there. And I think for me, the piece that I appreciate the most is the fact that all of this updates without me necessarily having to be hands-on, right? So as Noah mentioned there, the fact that you guys are taking advantage of this sort of fluid model, right? As things change, as things update, to then actually update whichever vault I'm invested in, therefore sort of taking a little bit of the headache away from me, right? Again, I really like the perspective and the approach. Let's maybe just dive a little bit deeper into the nodes and the vaults themselves, right? So when it comes to node operations, you guys will be building a partner chain framework. Who will actually be able to operate the network, and how can they do that? I know that the Xercher NFTs play a big role here with respect to operating as a node operator.
Huge amount of questions. I would answer it in a different order. So I would start with just the partner chain, right? The partner chain is made out of a whole bunch of nodes, but I think one very important thing to look at this is that we go into a token sale, as we have said a few times already. A lot of projects come into a token sale that that promise a product, that promise a blockchain, and I want that everybody who sees this knows that what Xerberus did is Xerberus has built one, right? Like this is we're months away from moving to mainnet. Like the testnet is live right now. If you are a Xercher NFT holder and you want to run a node, want to participate in this testnet, jump in our Discord. You will get the early version of the node. There's still one or two things missing in that node. Primarily the main risk model, because has still a challenge, but the network in of itself stands, and that is really the great achievement that we made here. So let's get the testnet up again. So this is right now the testnet, right? So you see we have when the latest block was, how many blocks have been finalized, and how many nodes are online right now. So you see we are pretty heavy on England still, and finally very heavy on Germany. I don't know why there's so many German stake pool operators out there, but I feel it's like is a massive amount. So guys, come on and join us. Now to the question Farid did ask, and Noah maybe can talk after that a bit about the challenges of getting the risk model into these nodes. Is you have to have an NFT, at least one. Better if it's a 1%, then you can definitely run a node. There is currently a system that we have deployed where if you have the most common one, there's a rarity in these NFTs. If you have the most common one, you will need 12 NFTs to run a node. Why do we make it so expensive to run a node? Because this network, it protects these index funds, right? So it's more money we get into that. We have to ensure economic security. Therefore, it is a little bit more expensive to run our nodes, at least from the NFTs. That being said, we will integrate a native lending and borrowing mechanism to make the capital movement very efficient. So people who have a few NFTs and they just want to borrow it out, they can do so within the Xerberus platform fairly soon, and then it will get very easy for people to set up nodes. In case you do not have enough nodes, NFTs to run a node, you might borrow one and share a bit of your returns. So we will make sure that all the NFT holders that want to run a node will be able to run a node one or the other way. It's very important for us that this message gets out. If you have more questions, just jump in our Discord.
Perfect. Noah, anything that you want to add to the conversation about node operation, partner chains, etc.?
Yeah, maybe I could just help some people. Maybe if maybe all this is kind of getting a bit confusing, right? Risk scores, index funds, node operations, and what are we trying to do here in general, right? The risk scores that we're building and what we're trying to do here is fundamentally a mathematical equation, right? And this mathematical equation can be run on any computer or process anywhere. Currently, it's being run on our private testnet with like our computers and a couple other people, like Simon said, in Germany. But ultimately, we need to get these calculations into an open sourced and decentralized way so that we know that everyone's calculating the same things, right? This is the necessity of the nodes in general. Now, because we want to decentralize the calculation of the nodes themselves, we also have to worry to make sure that the risk model itself is also node-able. It's like when we started making these risk scores and we started risk rating in general, the ratings would go up to like 500 gigabytes of RAM and impossible CPUs that people couldn't have. And this isn't really a framework that we can have for node structures. So I guess really what we've really been working on and what we're really trying to finalize, like Simon says here, within the next month or so, while we're doing this token sale, is finalizing the specifications for the nodes themselves. It looks like it's going to be around an M2 Mac, give or take a little bit, but nothing too much. And there's been some sacrifices here and there in the model to get it down to a smaller size in computation, but ultimately the necessity of having it open sourced and having it being able to be decentralized as a model itself is more important than some sort of huge extravagant model that we can just produce because I know a little bit of math, right? So yeah, that's all really I have to say about the nodes. Really, what we're trying to build here is this model we can all really calculate, we can all trust, and we can all agree that it calculates correctly, and put it into a node structure that we can really start. People can earn the benefit of having that a node being built basically, and having the rewards and the staking, and yeah, that's all I really have to.
Perfect. So I think we've covered quite a bit there. I want to thank you both for the demo. I think, again, one really important piece here is the token sale coming up very, very soon. For anybody who isn't aware, I'll leave the link to the token paper link down below. Basically breaks down everything from A to Z about the tokenomics, where you can get access, why the team has made decisions as to vesting, all of that good stuff. But given the fact that we're, trying to sort of condense a lot of this here, maybe Simon, can you break down again the core details and just sort of reiterate, the important pieces that the community needs to know?
So the most important one is, of course, the date. So on the 11th of November, that is the next Monday, at least from the time that I'm talking. So it is fairly soon. So if you see this video, it's probably next Monday from the point that you have seen it. When it comes to the price of the token, we have an 0.0268 ADA price, which puts us at an FTV of 26 million ADA. That's not expensive. That's also not cheap. That's pretty much in the middle. At least when you look at tap tools. I personally, because we have so much cross-chain interest, I think I would rather like to see valuations on CoinMarketCap. And if you use CoinMarketCap as your scale, then we're incredibly cheap. And also, we have a lot of upsides left. And I think that's at least, I mean, of course, everything can go wrong ultimately. But from my perspective, I see that Xerberus becomes a household name in Cardano, where there's already a household name, but also in other ecosystems. And that's really the goal where we're striving to get to. So that to the valuation, we choose a pro rata token sale because we want that in the case that the token sale is oversubscribed, everybody gets a fair shot and a fair share of the token, because good token networks are equally distributed. So we drink what we preach. I don't know if it's a saying, but we do as we preach. We want to have a good token network, so the pro rata setting is incredibly important. In terms of MinSwap, the MinSwap community has been incredibly supportive to Xerberus from day one. They have voted for lots of our catalyst proposals, and we just so it felt kind of there was no other option than MinSwap really for us after all the support they gave us. So it's definitely MinSwap, and we have about a total supply of 1 billion tokens. So 30% of the tokens will be immediately sold and hit the market the day that the token sale convenes. And lastly, that was also very important to us. Of course, there's a team allocation. The team has a 6 months cliff. That means for 6 months, the team gets no tokens at all. And then for 36 months, we get a bid. So basically, the team is fully vested by the time the next bull market is around. I think that's a very good alignment of incentive, because the bull market is always the easy part, right? But we have all incentive to make this project successful, get it through the bear market and into the next bull run. And of course, that has a lot of good implications as well for the token price.
Nice. Now, I know you guys did a recent live stream with Chicken, who's contributed to, I believe, some of the economics, right, of the actual token. So I know, Simon, you've got your screen here, and I'll go ahead and pull that up here in just a moment. But I think it'd be great to also maybe sort of highlight, what does liquidity provisioning look like? What does, that look like as the Xerberus token grows? Again, I tuned into that live stream and I caught a really interesting bit about you guys sort of adding more to the liquidity pool as things grow, and then actually breaking down the methodology as to why. So again, just another opportunity to maybe dive into some of the specifics here, but I'll go ahead and pull up your screen in the meantime.
That's amazing, yeah. And we're so grateful for Chicken. Chicken is such an amazing person to work with. He has been on the MinSwap Liquidity Council and is also one of the reasons why surely we sell on MinSwap. He has been looking at liquidity pools for MinSwap for like basically since the DEX is around. So he's a perfect person to talk about to talk about liquidity management. Quick about the distribution. I know everybody's interested in the pie chart. What stands out, right? We have public sale allocation for 30%, with 22% for the node operator. So this will be paid out as APY until revenues subsidize the APY payment out of basically vested tokens. We have 20% for the DAO. That plays a huge role in our liquidity. So this is protocol earned liquidity. That's not tokens for the team to sell. That is protocol on liquidity. And that once governance is activated, can be used by the DAO to incentivize further development of the project. So this is something, it's really a long-term airdrop. There's 1% airdrop for the Xercher holders, and then there's a 20% team. We have a pre-seed round. I'm personally quite proud of it that we did it. So we have 3 professional investors, 1 hedge fund, 1 CEO of another crypto project, and 1 co-founder of one of the founding entities. And yeah, we're fairly proud of this. When it comes to the pre-seed, okay, there might be fear, hey, have the pre-seed investors a huge advantage over me? Will they dump on me? And the answer is no. The pre-seed investors got a price that is fairly close to our public sale price. This was important to us because we don't want that there's a competition between our pre-seed investors and the public sale. We want to have a situation where everybody gets a chance, and this is not like, okay, there's a slight value increase since then, but it's not that they bought in for 1 million and now it's almost 10x, right? So that's very important for us. Of course, you can have a look at that, but the distribution over time. The utility, quickly, will be a proof of stake network like ADA. It is its own blockchain. It is highly interoperable. But the core yield mechanism is a proof of stake mechanism. You will also have access to specific indexes, because some of the indexes will not support an infinite amount of money. So there, the best opportunities are reserved for Xercher token holders. We'll also add a new dashboard to it where we bring the analytics back, which also will be behind the token gate. And lastly, you have governance power. In fact, with the Xer token, you have more governance power than I think in any other token right now, because Xerberus is, and I gotta jump back, is a registered DAO LLC. The DAO is a registered entity under the law of the Marshall Islands, and the token is anchored in the official company documents. I think that is really, really significant, because I think we're one of the first to do it, and I'm personally very excited about that, because it means you have a real right in front of in front of the law. This token contains a real right. Read that if you want to understand how exactly Xerberus provides value. But what is important to us, because we have been often asked, how does Xerberus makes money, because people only use our risk ratings. There's a very, very sound revenue model for Xerberus. We have clear customers, we have a clear pricing model, and here's some examples given how Xerberus would make money. But just to make it very easy, if in the token vault, in the index vaults, we have about $10 million, we'll run it for a year, we just make 80%, and if you saw the early index vaults, that's very conservative. We could alone, through the protocol, make about $2 million of revenues, right? So there is a real path to lots and lots of revenues in the Xerberus protocol. But now let's go to the liquidity, because I think that is really important. You can also read about APY. But let's talk about the liquidity, because I think it's important. So we thought a lot about liquidity because there have been lots of token sales who went like this, right? Like they went up and then down, and a lot of people lost money on it. And for us, it's our ambition to create a token launch that develops into a stable price movement in an upwards trend for the bull market. We can think a lot about it. We can create a perfect environment. We cannot promise that it happens, okay? But we can do our best that it happens. And one of the things that we will do is our Dapp and liquidity mechanism. So we will, depending on the amount of ADA that we raise, we have an allocation particular for liquidity pool. So in case we raise 3.5 million, we have about 700 ADA. In case we sell out, we have about 1.5 million ADA. And this ADA initially will only put in 200 1,000 ADA up to 300,000 ADA and keep a large allocation for later zappings. And so what we will do, and here there's the chart, we allow the first pump to go, and then we start zapping in more liquidity to increase the depth of the liquidity tool as we go in, and also create a bit of a guide the price movement in the right direction. This is a strategy developed by Chicken, and this is just the first step in our price support really techniques, or however you want to call it, methodology. After this is done, right, after we have really rounded up the liquidity pool and gave it the right nudge in the right direction, we will pursue a long-term buying strategy. For that, again, the product right now, as you've seen, is live for both Cardano, Ethereum, and Polygon. After the first Cardano sale is over, after we have conducted a zapping strategy, we'll roll out a marketing campaign targeted to the Ethereum community and open a liquidity pool with bridged Cardano tokens. These bridged Cardano tokens will put in a liquidity pool, in a Uniswap V3 liquidity pool, using a protocol called Arrakis, which will allow us to open a liquidity pool that contains 95% of our token and just 5% liquidity. Now, this is a very interesting situation, because there is a reason why you want to buy the token on Ethereum, right? You want to have the analytics from Xerberus. You want to know why a risk rating has changed. You want to buy some index vaults because it's interesting and it works, right? It's nothing political about that, right? It's just a working product. You want to use it. Now, in this environment, in this liquidity pool, people can only buy, right? There are no other tokens over at Ethereum right now that one could sell. And so after we did the zapping strategy, we now open another liquidity pool and really try to build one growth arch over another growth arch. And this is why I say, when people value Xerberus, I think you should look at CoinMarketCap and Auto Untapped, because it is already in the strategy from day one that will tap into this Ethereum liquidity, and also the Polygon liquidity, and also the Solana liquidity. And I'm 100% convinced that this is a way that we can build a token that has quite some potential upward mobility, to put it like that. Of course, this is not a promise, gentlemen. Everything can go wrong, right? Like it's just, like this is a rocket, might go up, might explode on launchpad. Well, if it explodes, I think Noah and I also explode with you guys, so it's gonna be fine. We're happy with everybody who wants to go with us on the journey, and this will happen one or the other way.
Thank you there, Simon. Super thorough breakdown. Again, I'll leave the link to this white paper or to this token paper down below. What I appreciate is the amount of detail, transparency, and understanding that crypto, is super early, right? So obviously not financial advice, but at this point, I think I'll turn it over to the both of you guys for final and closing thoughts. Simon, I know you just went there, so maybe we kick off closing thoughts here with Noah, and then we'll come right back to you, Simon, as well.
I'm just really, really excited for the next coming week, the next coming token sale. It really feels like we're heading into the next step of Xerberus, right? We've done a lot of analytics, we've done a lot of research, we've done a lot of reviews, and now we have some risk scores and risk ratings that really start working, and now we have to really move it into an infrastructure and a system that is open sourced and decentralized in this node type framework. So really moving into this next chapter, I'm really excited to see where we're going to go, see what we can do with the community and how much the community can expand. That's about it. I really, really appreciate it. Thanks for having us on as well.
No, it's always a pleasure. Back over to you, Simon.
It is probably one of the most exciting times that we have been here at Xerberus. We have built something that is now being launched at the base camp of the altcoin bull run, and I'm extremely excited what will happen next. And I'm just so grateful for all the community supporters. Our Discord is really overflowing with engagement. People are coming in, excited, asking for it. We have an incredible amount of, I just see the clicks and views, and I'm just incredibly grateful for the Cardano community and the Xerberus community as a subset of that, for all the support that have given us. And I'm incredibly grateful for the Partnerchain framework, because a lot of what you saw today, our aggressive cross-chain approach is only being possible because really IHK had the wisdom to think about this Partnerchain framework. And I think there will be many, many more Cardano projects using this framework to reach out in all of crypto. And I think I'm quite bullish on everything in our ecosystem at the moment.
Yeah, I think that you guys are, again, not just pioneers in the sense of what you guys do with Cerberus and risk ratings, but also pioneers when it comes to adopting the IOG or the Cardano partner chain framework. And so I know that there's the team from Nuvola that's also following suit. Obviously, Midnight is sort of the inaugural project, but I think there's going to be a lot of lessons learned. And the faster you're able to learn those things, the faster you can iterate and begin to really solve and upgrade what Cerberus is already doing. And so that'll do it here for today's video. I want to thank the both of you gentlemen, Simon and Noah, representing Cerberus, who's not only bringing risk ratings to Cardano, ETH, and Polygon, right? But they're now also bringing their index vaults and their Oracle services, as well as Siren. I mean, I feel like there's quite a bit for us to chat about. And so I definitely look forward to getting you guys back on to chat about those additional topics. But I think that'll do it here for today's video. Quite a bit to digest. Again, a reminder for the viewers, if you have any questions about anything, links will be left down below. If you found any portion of today's video to be helpful or informational, I would really appreciate if you could smash that thumbs up. It's one of the best ways to support me here as a content creator. Not only does it help to inform the Cardano community, it also helps to let outside builders realize what we've been building over the course of this long and brutal bear market. If it's your first time stopping by Dapp Central and you want more content and coverage like this, consider subscribing. And of course, if you want to join the Cerberus community, links are down below. And if you have any questions or comments, leave those down there as well. I'll make sure to pass those on to the team. That will do it here again, gentlemen. I thank you both and wish you all a wonderful and a happy token sale. That said, and as always, we'll see you all in the next video. Cheers, everybody. Take care.